Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Luciano, a manager with the John Hancock Global Environmental Opportunities Fund and senior investment manager, thematic equities at Pictet Asset Management. Luciano, it's great to have you with us. Welcome to Trade Talks.
Hi, Jill. Thank you for having me.
Your strategy invests in environmental solutions. Is this still relevant as we deal with a pandemic, a likely recession, and geopolitics?
Yes, very much so. Environmental challenges are becoming more and more pressing. And at the end of the day, despite a pandemic, global economy that might tilt towards a recession, greenhouse gas emissions are back at peak levels. So it's not just climate change. We follow a framework called the planetary boundaries. And according to this framework, we have already crossed 6 of the 9 critical environmental boundaries for the planet. So it's climate change, but it's also biodiversity, it's also chemical pollution, the green water cycle, the land system change, which has to do with deforestation, and the nitrogen cycle, which has to do with intensive agricultural practices. So really, we need to accelerate the sustainable transition. It's not easy. You mentioned war, of course. The war in Ukraine reminds us that we need to have energy security, and the energy transitions, unfortunately, take decades. They don't take months and years. So in my opinion, it's normal that we have the transition on the back burner for a little while, but we have a very, very long runway ahead of us.
How are you managing your portfolio amidst this high level of market uncertainty and volatility?
So the Global Environmental Opportunities strategy invests in environmental solution providers. So we have an inherent growth and quality bias vis-a-vis the broader market. And this is an approach that it served us well since we launched the strategy 8 years ago. And we intend to keep, because we think it makes sense even in a higher inflation environment, even in an environment with high interest rates. So basically, it's investing in companies that have wide economic moats. And this typically results in pricing power that is what you want in an inflationary environment. And also, we tend to like technologies that are mature. And so we avoid the early stage, we avoid unprofitable companies. And we think this is also should help in an uncertain economy in the next year or two.
What differentiates you from other environmental funds?
So we have over 20 years of experience in environmental investing, and we are focused investors. Also at Pictet Asset Management, we are part of a broader thematic franchise, which today has more than 50 investment professionals. And what really we focus on is on basically leveraging this fundamental research platform to identify the winners within the environmental theme. Our process is something that we've developed over these last 20 years, and it's based on science. And I would say it's our second differentiating factor. And the planetary boundary approach allows us to find solution providers for all the different environmental domains at the same time, and not just looking at one versus the other in isolation. And then also the size of our platform, I would say, is a differentiating factor, because we have over $25 billion under management. And so that helps us and gives us good access with management teams.
And finally, Luciano, what stocks do you like here?
So in terms of themes, we think that energy efficiency is really a low-hanging fruit in this very volatile energy environment. So in the portfolio, we have Johnson Controls, which in my opinion has a very strong secular growth story. It's been harshly penalized by the rotation and has had a multiple compression because also it's going through some supply chain issues, but we're very bullish about 2023 and beyond. Also in terms of themes, digitization is something that we've invested throughout time. In our opinion, digitization and decarbonization, go hand in hand. And here, a stock that we like and we continue to like is Synopsys. And they provide software for the semiconductor microprocessor manufacturers to make them more power efficient. So that's a stock that we like a lot. And then finally, maybe less technology heavy, but the US waste and recycling space is, in our opinion, quite defensive at this moment. A stock like Republic Services, they have a very resilient business model and very good pricing power also for this inflationary environment.
Okay, Luciano, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you so much.